Gold FM Speak Your Mind, and I'm your host, Jackie Spate. In studio with us is the National Manager for Policy, Economic Analysis and Research Unit, Mr. Fazrul Rahman. Thank you so much for coming on the show.
You're welcome.
We're going to get straight into it. Our first question is, what is FIRCA's revenue performance as at July 2014?
Yes, Jackie, it's a very good question. And FIRCA has been performing remarkably well. Our collections are very strong. If you look at the performance on every quarterly basis or even every month of this year, FIRCA has been exceeding its target. So when we look at the latest revenue figures that we have, which is the revenue collections as of July, FIRCA has exceeded the revenue target by $92.1 million.
Wow.
We were supposed to collect 1.051 billion, but actually we have collected a figure of 1.143 billion. So what it means that there is a strong move for FIRCA to ensure that we firstly collect our target, but we must also collect taxes that needs to be legitimately paid to government. And we have seen month by month significant high revenue growth rates. For your information, the revenue growth rate is 15.7%. And in the past, the normal revenue growth rate always hovers around 5%. So the message here is that FIRCA has recorded a very strong collection as at July. We are over the target by 92.1 million. And when the year finishes, we also expect the revenue collection to be over $100 million. Or in the worst case scenario, we are looking at a collection of $2.2 billion versus our target of $2.039 billion. We are expecting to collect 100 million more than what we are supposed to collect.
So could you explain what is driving this solid revenue collections?
Yes, revenue collections, as we know, is the product of economic activity.
Right.
As the economy performs, whatever is the performance rate, we also pick it up in the tax collections. So there are three major reasons why we are collecting this level of revenue. Firstly, it validates the Reserve Bank of Fiji's assessment of the economy.
Right.
We expect the economy to grow by about 3.8% in 2014. And what comes in tax numbers is the truth, is the reality of what was projected to be happening in the economy.
Right.
So first reason of strong collections in revenue is an improved economic activity. And if I drill down further, it goes down to the level of investment and consumption that is happening in the economy. And if I can validate that statement, the domestic VAT, which simply reflects the level of spending in the economy by consumers, by business people, anyone who consumes whatever good and service they need, is subject to pay VAT.
Right.
And the domestic VAT collection as of July is 16.1% over that of 2013. So this is a clear reflection that there is a very strong consumption activity in the economy. And if I can go a bit more further to explain where this consumption is coming from and why it is coming from, the consumption behavior, as we know, is dependent on people's income. If people have more money in the pocket, then of course they will be encouraged or they'll be enticed to spend more.
Yeah.
And even in the business community, if you have a lot of money with you, you may like to embark on a new investment project, or you like to buy an additional machine, or you like to expand your business. So the point is that how that has been made possible. That was made possible through various government policy reforms.
Right.
And in particular, the massive tax cuts of 2012 budget, which saw tax rates being reduced from 31% to 20%, has created a shock, which means that people all of a sudden has a lot of money with them.
Yeah.
And then, of course, this mode of spending starts. So the point here, Jackie, is that there is a very strong consumption behavior in the economy, and that is due to consumers as well as the business community spending a lot of money.
So earlier you mentioned that you were backing up exactly what the Reserve Bank of Fiji has been saying to the public in all of their press releases recently. So this is the most recent numbers released.
Yes, exactly,
So
Jackie.
you can confirm, because there's been a lot of misinformation that's been going out to the public. So you can back up Reserve Bank saying that, yes, there is a lot of economic growth happening right now.
Exactly, Jackie, because whatever comes in text is the reality. We can actually even drill down further to find out exact number of businesses, the exact businessman who has made that profit and on which we have collected that tax. So whatever is happening on the ground is what is being reflected in FECA's report. And agree with you that whatever Reserve Bank has projected, we are realizing it in our tax collection. Like, for example, I did mention about the strong consumption behavior. Similarly, there is a strong investment behavior as well. And Reserve Bank in its release has clearly stated that there is an increased bank lending.
Yes.
So there is a lot of loans being lended by banks.
Yes.
And if you look at the tax collections, we have seen the correlation of that activity in the capital gains tax transaction. You know, the capital gains tax is a tax which people pay when they sell off their assets, like second house or third house, or they like to dispose of any asset. So in doing so, like they may have bought it for, say, 100,000, and now they want to sell it for 200,000. So that extra 100,000 is what we call a gain that needs to be brought in the tax system. Then that needs to be taxed. And well, of course, when people like to buy a asset, they don't have money with them always. So there is a need to go to bank and borrow the money. So the point here is, Jackie, that capital gains tax collection as of July is 334% more than what we collected last year. So in a very macro level analysis, it means that the level of gain which people have enjoyed this year because of intense investment activity has been trebled.
Right. True.
And of course, if I can just lead on further, like we know people, when they engage in any investment activity, they are subject to stamp duties as well. So we are also seeing increased growth in stamp duty as well. So the message here, Jackie, a very simple message, is that tax is looking very good. The collections are very solid, and it reflects what is going on in the economy. And of course, as we all know, FECA is also very much particular about compliance.
Right.
And an area that FECA is now moving towards is what we call voluntary compliance.
Okay, I'm going to hold you on that one. We're going to go to a quick break, and when we come back, we'll talk more on that.
Thank you.
Gold FM, Speak Your Mind. Welcome back. We're in studio with Mr. Fazrul Rahman, the National Manager for Policy, Economic Analysis and Research Unit at FECA. So, Mr. Rahman, just going right back to where we left off, you were explaining something about FECA's compliance policies. Can you elaborate further on this for us, please?
Yes, please. Of course, I'll do that. If you look at the compliance side of FECA, when you talk about compliance, we're talking about people who should pay tax, legitimately required by the law to pay tax. FECA should be ensuring that its systems and processes are sufficient to capture those, so that there is no escaping of income being not subject to tax. So the message here is that FECA has introduced several measures.
Right.
If you know FECA's powers, one of the significant power that like people are aware of is what we call departure prohibition order. Right. If we audit a person and we find out that that person has evaded tax, and we have given him or her all the avenues to pay up, and if that does not happen, then FECA can issue some recovery measures in the form of departure provision order. So that person can be stopped from leaving the country, for example. And there are other things of that nature as well, like we got garnishee orders. Like we can issue an order to the bank to ensure that if the person is having some amount of money in the bank, that money ultimately should be directed to FECA so that tax can be settled. And of course, going further, you might have heard of something called unexplained wealth.
Yes,
Yeah?
yes, I have heard about that.
Yeah. So FECA is working very closely with other agencies like Fiji Financial Intelligence Unit, and we keep track of the movement of cash.
Right.
Because Section 11 of the Income Tax Act requires that all the worldwide income of a person needs to be declared to tax office.
Yes, of course.
And if all of a sudden in somebody's bank account there's a big lump sum payment of 100,000 or 150,000, and that person cannot explain the source of that money, then of course FECA comes in the picture to ensure that we impose appropriate taxes on that money.
Right.
So the message here is Jackie, that FECA has introduced several compliance policies over the last 10 years. And if you recall, recently, in 2010, FECA has introduced a new tax law.
Yes.
Called Tax Administration
Law.
Exactly. And some of the recent examples, if I can share with you.
Yes, of course.
Like FECA is actually going a step further to ensuring that if someone who has genuinely evaded tax and has shown no interest whatsoever to come and discuss and settle the tax, FECA can possess their property and put on the market for sale. I mean, it can go up to like that length.
Yes.
But we are very mindful of giving taxpayer every opportunity so that there is no negative like impact on the livelihood of the person.
How much time do you give them before you take drastic measures, really?
That's right. So basically, the time that needs to be given is like we exhaust a process. For example, if somebody is owing a tax, we get in touch with the person. We issue demand notices. Then we encourage him to make some arrangement with tax office to pay tax.
Right.
And that arrangement can go it can go up to a year, or if the amount is small, can be within few months. So the message here, Jackie, is that taxpayer is given every opportunity to comply, and we feel that in the current climate of low taxes, all the person has to pay is just 20 cents of that extra dollar of profit.
Right.
The tax rates used to be as high as 50% or 52% in 1992. Income tax rate was as high as 52%. And of course, when tax rates are high, there is some views in the community that every attempt should be made to evade it. But tax rates have been reduced to 20% in Fiji, which means that there is less incentive to avoid. I think we have to view tax as a return on the benefits we like to have in the society we live in. So the message here is that tax compliance has been very solid.
Yes. And you can see that
exactly
in the numbers and the percentages that you've shown us today.
Very true. The amount of tax that was owed to the government used to be around 130, 140 million. So today, the amount that is owed to the government is hovering around 50 million. So we have reduced the level of tax areas to FECA.
That's a very big reduction there.
Very true, very true. And of course, we know the benefit of taxes, because like we like to pay tax so that we live in a society where we are able to enjoy a lot of public good.
Yes, of course.
And a lot of things that comes with it.
Would you say that, well, of course you would, but I'll ask, does Fiji has a good tax policy, Bix?
Right. Yes, certainly we would argue very strongly, based on the international best practices and based on the international reports and the advice from international bodies, IMF, World Bank, and other institutions, that Fiji has a very best mix of tax policy at this point in time.
Oh, okay.
We have modernized our tax regime to firstly to ensure that the tax regime is a low rate and broad-based.
Right.
So by that I mean we should have a low rate of taxes in Fiji, and at the same time we need to tax everything that needs to be taxed. Yeah?
And it's consistent with global practice.
Exactly, consistent with global practice. Like if we are not going to tax one set of income and the other set of income we impose tax, so it creates what we call inequity in the overall tax system. It means that we are favoring one income versus imposing a tax on the other. So, for example, you might have seen the introduction of the capital gains tax.
Right.
So, anyone who is working in office or is a wage and salary earner, if the income is above 16,000, the person needs to pay tax. But on the other side, if somebody is not working, just staying home and selling buildings, properties, and making some kind of gain, we like to ensure that that gain is also subject to tax, so that it creates a level playing field. So, in summary, the best tax mix includes a policy that is more towards low rate, broad-based. If I can elaborate that further, it means we want to ensure that tax system supports the economy. For example, the OECD, the Organization for Economic Cooperation and Development, has done a study.
Yes.
Like the OECD group includes big countries, includes top economies, and they have done studies to see what is the best tax system. Whether we should have a high income tax rate or low VAT rate or high VAT rate or high customs duties. And it has proven that income tax is most harmful to economic growth. And Fiji has ensured that we have a low income tax rate as much as possible. So, and the evidence is clear.
Yes.
Because when government reduced the income tax rates in 2012, we have seen a significant pickup in the economy.
Right. How much did they reduce it by?
Right. So, like in the OECD group, if you look at their tax structure, they have a very low income tax rate. Some countries have rates. It goes up to 15%. Like, and some are on the high end. But the message here, Jackie, is that low rate, broad-based taxation system is proving to be the way forward because it is pro-growth and it gives more for citizens of the country to enjoy in terms of increased income, and for the businesses as well to ensure that they're not burdened with excessive taxes.
Right. Well, we're going to go to a break right now. Thank you so much for that. But stay with us. We'll have more coming up right after this. Gold FM Speak Your Mind. Welcome back. We're in studio with the National Manager for Policy, Economic Analysis and Research Unit from FIRCA, Mr. Fazrul Rahman. Our next question for Mr. Rahman is, what are the major tax incentives introduced by the government?
Great. There has been a series of tax incentives which the current government has introduced. And when we talk about tax incentives, it means the benefits to the business community.
Right.
And of course, tax incentive could also mean the benefits to the consumers. So from the business community point of view, we know that we depend a lot on exports. We like to sell goods out of Fiji and we like to increase our foreign exchange. So government is very much particular about exporters, which means that we need to support our exporters.
Yes.
And there are a number of incentives for exporters. The first one being VAT zero rating. So what it means is that when anyone exports the goods out of Fiji, that amount that is being exported is not subject to VAT, but the exporter is able to claim back all the VAT that he or she has paid to make that export possible. Yeah?
Yes.
So all the costs that went into making that product complete, all the VAT that was associated with the production process, the exporter is able to claim it back.
Right.
So FECA is to ensure that we issue refunds to exporters, because VAT should not be the cost to the business. VAT should flow through the business.
Yes.
Yeah?
That's very encouraging for our local exporters.
Yes, very much so. And on top of that, government has also ensured that whatever income the exporter makes at the end of the year. So throughout the year, the exporter will sell goods out of Fiji. When the year finishes, then the exporter will make a tax return to FECA, and we got an incentive to ensure that 40% of the export income is not taxed.
Wow,
It is
40%.
exactly. So it's just 60% that is to be taxed. And if we look back in time, at one stage it used to be 100%. Then we have gradually adjusted the export income deduction to ensure, like in line with the overall tax rate reductions. But the message is that it's a very big incentive to be not taxed 40% of your income. Yeah?
Yes.
And of course, we value exporters. They are very critical. On the same token, there are other incentives for exporters as well.
Yes.
For example, if somebody is importing tomato for some reason from overseas and is converting it into a tomato sauce,
Right.
yeah, and after that he or she exports it out of Fiji, so they could qualify under something called duty suspension scheme.
Okay.
It means that whatever raw materials you input or import into Fiji, that raw materials should be suspended from the payment of all the customs duty, including the import VAT, provided that that good is converted into an exportable commodity. Yeah?
Yes.
Very good incentive for exporters. So we encourage the listeners to venture their production towards export as well. Because there are a lot of incentives out there for exporters.
Right. Could you explain further on the one of the tax incentives, which is the Fiji My Second Home?
Right, Fiji My Second Home, as well as I had just mentioned about exporters, that we need foreign dollars into the country. We need money into the country so that it helps us in the economic development.
Right.
So Fiji My Second Home incentive was introduced in the 2009 national budget to ensure that we encourage like people who have left Fiji and or any foreigner as well to open up a bank account in Fiji and deposit the required sum of money and earn interest income. And whatever is the interest income will not be subject to tax. So Fiji My Second Home program has been very useful to entice foreign money to come into Fiji.
Yes, and I'm sure you've seen the benefits of all of these tax incentives that have been introduced.
Yes,
it must be, the feedback.
Very much so. Like if we actually value the total value of incentives that we give annually, it is about $200 million.
Wow.
So it really shows the investment, because we view incentives as a means to get investment in place. So incentives are good for the economy because it gives an edge to the businessman to ensure that there is some tax savings.
Right.
So there are many others, if I could elaborate further, like the tax-free region incentive.
Okay.
That incentive has become very popular.
Okay.
We are seeing applications basically being made to FECA office every month, a new application. Tax-free region incentive is basically if you invest in the Northern Division,
right,
or other areas around Northern Division, as well as invest in this the Viti Levu corridor between from Korovau all the way to Tavua.
These are key areas that the government is trying to develop.
Yes, very much so. Because as we know, that government has put in significant infrastructure, the roads around these areas.
Yes.
And now the view is that we need to provide incentives for business to actually start.
Startup, yes.
Yeah, startup. And so tax-free region is a very popular tax incentive. We have seen a lot of requests being made. So the benefit is that if you are in the region, your whatever income you will make will not be subject to tax for the next 13 years.
Okay.
So whatever profit you make will be zero tax.
Zero tax for 13 years.
Yes, zero tax for 13 years.
Right.
And
so, of course, a lot of people, as you said, on a monthly basis are applying for this.
Yes, very much so. We are receiving applications for tax-free region incentive on monthly basis, at least one or two actually. And we have seen actually number of projects being implemented as well in the Northern Division. I recall there was an investor in the agriculture sector who has set up the farms. That investor has brought in very high-tech equipment as well, very nice tractors and things like that. So incentives are good for the country
Yes.
because it gives an avenue for business person to make a quick decision.
Oh, yes. And it does encourage them to grow their business as well.
Yes,
When
very
you're
much
looking
so.
at it, it does.
It
does
does.
help them in a lot of ways. Well, we're going to take a quick break right now, but when we come back, we'll discuss more of these incentives from FIRCA. Gold FM, Speak Your Mind. Welcome back. We're in studio with Mr. Fazrul Rahman from FIRCA. He is the National Manager for Policy, Economic Analysis and Research Unit. Mr. Fazrul, what differences has FIRCA noticed after the tax threshold was increased to 16,000? Meaning people earning below 16,000 don't have to pay any tax at all. Surely this has decreased government's revenue in some way.
Okay, great. So, as I had mentioned, that Fiji has adopted a low-rate, broad-based taxation regime, which means that we need to have a small burden of tax on citizens. And in doing so, low-income earners are being given exemption. So, if their income is up to $16,000, they are not subject to income tax.
Mm-hmm.
The impact of that, of course, as we know that when tax rates goes down or when income tax exemption goes up, then of course immediately there is some impact on the government revenue. Yeah, but what we are also saying that because it is a direct tax reduction, it means that all of a sudden people have a lot of money in their pocket, and they go and spend.
Yes.
And when they spend, we collect VAT.
Right.
So whatever is a lost revenue, we are able to recoup it through other indirect taxes.
Okay.
Yeah.
Yes.
So the message here, Jackie, is that income tax threshold from policy point of view is very important because in a developing country like us, we need to be mindful of the low-income earners and the small businesses.
Yes. And this, of course, would be a big help to them because if someone was to say, oh, we're earning 14,000 or 13,000, and you go and tax them on top of all the other deductions that they may have with whichever company they're coming from, this is a huge, huge incentive for them.
That's right.
For tax not to be deducted.
Exactly. So $16,000, like for example, if you have a small shop or you have a taxi business or a small canteen, so whatever sales you have done, less whatever expense that went to ensure that sales takes place, whatever is left, which is the net profit. So we're talking about like net profit. If it is below 16,000, then that is not subject to tax. So from business point of view, small business point of view, it's a good incentive because it provides you that edge in ensuring that that there is some tax savings. As opposed to somebody who is above 16,000, there is a small amount of tax that's to be paid. But we are in a developing country. We need to support the low-income earners. And of course, in terms of consumption, we all know that basic food items are not subject to VAT.
Yes.
So low-income earners benefit a lot. Firstly, they are exempted from paying income tax. Secondly, when they take that money and spend in the shops, and of course, a large basket of their spending is on the essential food. So that is again not being subject to tax.
Right.
And if I could elaborate a bit more further, then a number of basic food items are also not subject to customs duties.
Okay.
Yeah.
So the food items with no VAT on them at all, powdered milk,
Correct.
rice,
Right.
canned fish, flour sharps, cooking oil, and kerosene.
Very much so. So those are really the essential food items that
on a day-to-day basis.
On a day-to-day basis, exactly, because people need to buy flours, milk, and of course we have got something called kerosene there added to the list.
Yes.
So the message here is that low-income earners and SME sector of the economy needs to be protected. And when I talk about SME, government has also introduced an incentive for SMEs as well. So if the gross turnover or the sales or the income of the SME is up to $500,000, that SME is not subject to tax.
Okay.
So whilst we're giving $16,000 for individuals,
Yes.
we are also ensuring that the small businesses that are particularly in the agriculture sector, they are insured that sales of up to $500,000, or basically $500,000, is not subject to tax. So when we talk about the Fiji's overall tax system, the tax system in any country needs to be based on three fundamental principles. Firstly, it has to have a balance between economic efficiency and equity. As I was saying, that
As
we
mentioned earlier, yes.
and of course the next one is about simple administration. So in the context of a small business, we have also simplified the VAT process for small businesses. We don't want people to line up FECA office every month to lodge the VAT return. Yeah.
Right.
So in the 2012 government budget, it was mentioned that small businesses, which means that those businesses who have a turnover of up to $300,000 are given option to lodge either one VAT return in a year or lodge on the quarterly basis,
Right.
rather than being asked every month to come
Yes,
to.
every month, yes.
Yeah. So these small procedural changes really impact on SMEs. We're making the cost of doing business for SME to be low as possible. This VAT regime that we currently have in Fiji, it ensures that VAT is not a cost to the business.
Yes,
Yeah?
you did mention that earlier, yes.
So overall, the impact of low income impact on low income earners has been very minimal in terms of the tax, because as you may note that there are about 298,000 workers in the country.
Yes.
As-
You did mention that, 298,000.
That's right. If you look at the Bureau of Statistics household survey, the census data for 2007, we would see that we have about 298,000 workers in the country. Now the question is, how much of those workers pay tax?
Yes, how much of them pay tax? Yes.
And we have seen that there was a move by government to ensure that we exempt income on low income earners. So workers who are currently paying tax to FECA and who are over $16,000, they equate to about 29,000 workers. So about 29,000 workers out of the 298,000 workers who are in the labor force are paying tax.
Okay, I'm going to hold you right there. We're going to go to a quick break. But when we come back, we'll discuss further more on this issue. Gold FM Speak Your Mind, welcome back. We're in studio with Mr. Fazrul Rahman, the National Manager for Policy, Economic Analysis and Research Unit at FECA. As we were discussing earlier, the amount of, the number of people, who are working right now stands at 298,000.
Correct.
And of that 298,000, you mentioned that 29,382 people are paying taxes.
Are paying income taxes, that's right.
Right, and that is 10%.
So
around
basically,
10%.
it's around 10%.
Yes. Now, of that, are there people who, excluding those who are exempted from paying tax, are there those who are purposefully dodging paying tax?
All right. We have introduced a new tax system from this year. It's called PAYE as a final tax. And we have required the employer to provide a monthly and annual reconciliation to FECA.
Right.
So if you look at in the overall scheme of things, we have tightened up our system. As I had mentioned, there are some strict penalties and strict rules that governs the PAYE tax. So these 29,000 taxpayers who are earning above $16,000, we are mindful that there may be some who are scheming their incomes. They, rather than getting a salary income, they'd like to move towards benefits. And for that, we have introduced the fringe benefit tax.
Right.
And maybe there would be avenues to ensure that rather than being being taxed at 18%, the person might get it at 7%. So the message here is that we have introduced checks and balances to ensure that any worker who's supposed to pay tax should pay tax.
Should pay tax.
And of course, we work very closely with the FNPF.
Yes.
We also have, under the new tax system that we have introduced, there's something called employer monthly schedule.
Right.
Employers are now the focal point with FECA, rather than the employee lodging the return, because it is in the employer's interest to ensure that they properly account for the workers.
Yes.
Because employer is able to claim the wages expense in the employer's profit and loss statement. So if you are paying somebody and you hired somebody, you would like to claim that money back in your profit and loss statement. So in a very simple way, because government has been issuing income tax exemption threshold. For your information, there was no income tax threshold prior to 1992. When VAT was introduced, there was a income tax exemption threshold of about $4,000 that was introduced.
So this was in 1992.
That's right.
So that meant everybody, including low-income earners,
That's right.
were being taxed?
Very much so. And for your information, the maximum tax rate in 1992 was 52%. So
that is very high.
Very high.
Very, very high. For low-income earners, below 16,000.
Exactly. And that's why the introduction of VAT made the tax system somewhat equitable. It means that there needs to be some realization that everybody needs to contribute to the economic growth of Fiji. And the introduction of VAT has done some fiscal restructuring to the PAYE tax system. As I had mentioned, PAYE tax rate has come down from 52% in 1992 to 20% today. And PAYE, as you know, has also been providing some allowances in the past. We had child allowances, marital status allowances, FNPF allowances, and you may have also noted that with the VAT introduction, a number of customs duties were also reduced. So the point here is that because, as I was saying, that Fiji has moved towards a low rate and broad-based tax system, it has ensured that our reliance on income tax should reduce.
Right.
And the move should be towards other indirect taxes.
Yes. So just if everyone was honest with all their taxes, if all the taxes were paid on time and you didn't have to go after them, how much revenue would government be able to collect?
Good question. There is something called underground economy.
Okay.
There's something called cash economy. There's something called hidden economy. It means that there are a lot of transactions going on that is bypassing the tax system. Like, for example, people dealing in cash. There is no receipt. There is undervaluation of customs entry and so forth. So the point is that underground economy is a problem for every country.
Right.
And some estimates have shown that underground economy in a developing country like Fiji is between 25 to 30%. What it means is that the official economy of Fiji is valued at 8 billion. And we are saying that about 20% of that, which is the underground economy, is not being filtering into the tax system. The message here is that if we are able to collect every cent that is out there to be collected, some estimations show that we can collect about $300 or $400 million more annually. Because to know what is out there requires intelligence for us to really assess the authenticity of every business transaction. It requires resource and basically strong collaboration, not only within Fiji but with other stakeholders outside the country as well. But FECA has made significant progress, as I had given you one statistic to say that the level of tax areas used to be around $130 million. It is now only $50 million.
$50 million, yes.
And some of the reasons behind the solid revenue performance for FECA is also a strong compliance action. We are auditing high-risk taxpayers.
Yes.
You may have seen from customs point of view, at the airports, we are ensuring that all the suspicious, like movement of cash, is known and investigated.
Yes. A lot of stories about that. People bringing in money.
Yeah, that's right.
High amounts of money.
True. People put in the money in the suitcase, and we have seen cases where if somebody who's on the departure prohibition order list, they're able to change passports or trying to scheme around other ways of taking the money out of the country. As we know that there is something called tax clearance process. If somebody wants to take the money out of Fiji, Reserve Bank will rely on FECA's tax clearance before approval is given. So all in all, Jackie, underground economy or the hidden economy, or if everybody is honest to pay tax what they're supposed to pay tax, is a problem for every country. Yeah.
Yes, of course.
And Fiji has responded with number of things. The Tax Administration Decree of 2010, which have introduced penalties. We have seen amendments to the Proceeds of Crimes Act. We have intensified our working relationship with Fiji Intelligence Unit. Those are some of the measures that shows that we are on top of compliance as well.
We can see that now that FECA is playing a much more important role in the community than it did before.
Yes.
With all these policies that you've been coming up with, the implementation of them, actually putting them in and ensuring that they work.
Very true, because the other side of compliance is voluntary compliance. Because we want to ensure that we educate people, we let them know of the facts, of the legislative provisions, so they are able to comply themselves rather than us sending notices. And I think it's working out well because in an era of low tax rate, we can do better by educating people more.
Oh yes, of course. And on that note, we've finally reached the end of the show. Thank you so much, Mr. Fazrul, for coming in. You were saying by educating people, before we leave, if people want to know more about this, do they just come down to your office?
Yeah, sure. We have a dedicated website. And of course, we got specific teams out there. Actually, for information, we are going all over Fiji.
So you have road shows going around?
Road shows all over Fiji.
Are there any right now this week?
What we had, like when we have these hibiscus festivals, for example, we have the showcase. But we have teams that goes around and issues joint ID card. So I encourage people, if they can just make a call to our office.
Yes.
Or if there's an institution or association that needs FECA to come over, so that we could help them in the joint ID card registration and so forth.
Even informing their workers, keeping people informed and ensuring that they're aware.
True. We can come out and do anything on any FECA business.
Okay. Well, there you go, ladies and gentlemen. And on that note, thank you so much for joining us on the show today. And be sure to join us again next week on Gold FM Speak Your Mind. Vinaka.